Hi everyone and welcome to today's Morning Report with me, Richard Perry, Market Analyst at Handtech Markets for Tuesday the 20th of May. The handover that we've had actually from the Asian session has been fairly mixed, in fact. The Wall Street markets last night were mildly positive and had a decent close across all three Dow, S&P and Nasdaq indices, but the volume was fairly light, and that sort of gives a little bit of concern or caution, I think, probably more to the point, as to how much you read into that. As I said, Asian markets were fairly positive, with the exception of certainly Thailand, which continues to have home domestic issues. It's under martial law in Bangkok, and the stock market appreciably fell on the back of that. The Nikkei in Japan actually had a decent rally, just under around 100 points up on the Nikkei, and that came as the yen weakened overnight as well. So the yen started to weaken, and that certainly helps the domestic exporters, and that has helped the yen higher overnight. But as I said, into European trading, there's been a slightly mixed to negative tinge on these markets. FTSE's continues to fall backwards, 0.4% down on FTSE. DAX and CAC just slightly lower, just under 0.1% lower. So FTSE again underperforming, and on the slide at the moment. You've got this morning. You've got the UK CPI, which is pretty much the only piece of market-moving data that we're going to get today. UK CPI, but that CPI figure that comes out at 9:30 UK time is benefiting certainly the sterling at the moment. Sterling is 0.2% up against 30 pips. That is up against the dollar. Pretty much everything else is fairly dollar strong, with the euro trading lower, and also Swiss franc lower. And the Aussie dollar as well has fallen away quite sharply, over 0.5% lower for the Aussie dollar, and also the Kiwi dollar as well today. So both of those commodity currencies correcting today. The only exception, I suppose, being the yen, which, as European trading has got going, the yen has slightly weakened today. Sorry, the yen has slightly strengthened, with pulling dollar yen lower today. In terms of the VIX, again we're still fairly low on the VIX, 1242. Very slight decline there overnight, so not a huge amount to go on. But there you've got the dollar index as well, which is after having a couple of days of correction, it's starting to pick up once more, and that is reflected in all the major currencies, which are fairly showing dollar strength today. As I said, we've got UK inflation today, 9:30. That's forecast to come in at around 1.7%, so an increase on the 1.6% last month, and that would be a bucking of the trend that's seen it fall pretty much every month over the past 6 months. So it'll be interesting to see. Actually, that's over the part almost 8-9 months. So interesting to see if sterling, if the UK inflation does pick up, what the impact on sterling will be, because sterling has been starting to that is basically back up towards the resistance band of a head and shoulders top pattern that I'll show you in a minute. So if it can break through there, that will be interesting on the inflation data. My chart of the day today is the S&P 500. We've actually seen a couple of days here, this is on the daily chart, a couple of days in a row of picking up. He seems to be now, over the past month or so, finding support around this red 55-day moving average, which currently comes in at 1868. So just bear that in mind on the downside if we get a renewed correction. And certainly you'd say this is still probably just trading sideways, no real direction yet. It had a poke above 1900, but there was a quick rejection of that move. So it'll be interesting to see if it can continue to maintain any sort of upside momentum, because at the moment it is slightly bordering on the positive on the momentum indicators, but as I said, this general sideways shift in the S&P is still continuing. The intraday chart shows that probably more decisively, where you've really not got any real movement on these moving averages. They're all pretty much going sideways. But the thing that interests me here is the fact that you've got these momentum indicators that have already certainly on the stochastics up into overbought territory, but the showing signs of rolling over, and certainly the MACD lines below neutral still, whereas this there is a band of resistance, you'd probably say around that 1890 mark, where the highs have peaked out previously in May, used as a bit of a basis of support around 1891 mark, but then fell over. So 1890, 1891, I think is an interesting level of resistance there in the near term, underneath that 1902 high that we saw. I think on the downside, you've also got to be looking at 1860 as the key area initially, but I think the big key move on the near to medium term is 1850 now, and that equates to pretty much where that big uptrend on the S&P comes in. 1850 is pretty much there, so that is now an increasingly important support level, 1851, 1850. So just watch out for that. But at the moment, I think the S&P is still trading in this sideways band, and I'll be interested to see if it can break above that that 1890 area as it moves possibly towards 1902. So at the moment, I'm still fairly neutral on the S&P 500 on the near-term basis. Okay, I wish you good luck in your trading today. As I said, UK CPI is pretty much the only thing we need to be watching out for, although there are a couple of Fed members speaking this afternoon, which might have an impact and give an insight into monetary policy for the Fed. But whilst we wait, I wish you good luck in your trading, and I'll speak to you later. Thank you.